Hi, thanks so much for tuning in. You're watching BQ Prime, and we're here to talk about arguably the stock of the day so far, GMM Pfaudler, up over 6% at this juncture as I look at the screen on the back of its earnings. We're joined by the Managing Director, Tarak Patel. Tarak, thank you so much for taking the time.
Alex, thank you for having me.
Okay, so I'm going to right off the bat talk about, of course, the headline numbers. Across the board, you're seeing a stellar increase. If you're talking about revenue, you're talking about profitability, you're talking about operating profits, everything is up. What are the key reasons behind that sharp increase in performance?
So I think what has done well is our international business. So when I talk about international, it's mainly the US and the Europe business that has done exceedingly well. In spite of the uncertainty and the situation there, we've seen a really strong improvement both in terms of revenue and profitability, right? So that's been a nice positive surprise for us. India continues to remain very strong. The India story still remains intact. Chemical and pharma are still investing. So all in all, we're quite pleased. Order intake remains very, very strong. And one of the big indicators for us is the backlog, right? So our backlog currently stands at about 2,100 crores of backlog, which means about 6 to 9 months of visibility, right? So all in all, a very strong quarter for us. We're very, very pleased.
Talk about the order inflow standing at what, over 800 crores, 830 crores nearly, and that's significantly higher than the trajectory you've seen over the last year at least that I saw. Why is that?
So I think some of the businesses that we've been kind of spending time on to try and improve have started to show some signs of the revival. The services business, which is a large component, up to 40% of the international business comes from services, is now also picking up. Now that the pandemic has slowed down, your factories are opening up, service people can visit. So that's really helping us as well. But I think what's also happened is we made breakthroughs into new industries, right? So like the power, like the metals and minerals, the EP play, we've done some work with bioplastics. So a lot of new industries opening up. So all in all, besides historically strong, industries like chemical pharma, we're also seeing some amount of breakthrough in new industries as well.
Okay. In the second half, I think to a large extent, people are looking at the acquisition that you've just completed, and they're wondering what the implications are going to be on the operating side. So the GMM International acquisition, Q3, I believe, is when it starts kicking off and that integration really happens. What are the implications in the second half?
So, we had ownership of the international business. It was 54%. So about 46% was kind of lost in terms of profitability to minorities. Now that has been cleaned up, we own 100%. So you will see an improvement in the flow through from next quarter onwards. In terms of integration, we have a few acquisitions that we recently just completed. One is Hydro Air in Italy and JTS in the US. So those are going to also help in terms of improving both revenue and profitability. Small companies that can kind of double or triple in size very, very quickly, right? So all in all, M&A has been a cornerstone of our strategy, will continue to remain a very important part. We have a few ideas in terms of also enhancing our the product the portfolio. So going forward, we would like to add more products as well.
So that flow through of profits, is it going to be therefore a significant uptick Q3 onwards? What are you building in?
No, so basically it was just it will be now and just going on into all quarters, right? So 46% is now going to be added back on. So like in terms of earnings per share, you will see an improvement because currently that was not part of the EPS and now it will be.
Okay, I want to talk about consolidated debt as well. And this includes subsidiaries. Where does it stand right now, and what's the plan on leverage?
So currently, I think just to give you some ratios, I think we are a very comfortable the level. So there's nothing to kind of worry about. In terms of pension as well, pension is there in the UK and Germany, and that's reduced significantly as well. So all in all, I don't have the debt numbers at the top of my head, but very, very comfortable in terms of the debt ratios.
Fair enough. Okay. Outlook on business. You mentioned Europe and US was a positive surprise, and that's, I think, surprising considering what we're seeing, especially in Europe. So what is the outlook according to you in the second half for these businesses, and specifically on the domestic pharma space, which, as I understand, is a major client for you? What is the kind of outlook there and visibility there?
So I would say I'm cautiously optimistic. I think we've seen probably the worst of what Europe in terms of energy cost. I think there is now some stability. Prices have started seeing a downturn. So I think next few quarters, I think there will be an improvement. In terms of India as well, I think what's important to note is the last quarter was the last quarter where we used up all the expensive steel plates, right? So next quarter onwards, there'll be some improvement here in India because new fresh plates, which are cheaper, will now be part of the product mix, right? In terms of the pharma play here in India, still a bit slower in terms of growth as compared to maybe the chemicals. But we do see some PLI action happening, especially in South, in Hyderabad, in Vizag. But pharma still hasn't picked up to the levels that it used to be. Hopefully, next few quarters, we'll see some kind of revival there as well.
Okay, you mentioned that acquisitions has been a cornerstone, and you've made substantial acquisitions in the recent past as well. What is the plan going forward? And also take us through Capex, because you mentioned a few products that you want to get into. How does that look in the next 2 years at least?
So if I'm not mistaken, it's about 7 acquisitions in the last 4 or 5 years. So we've been quite busy. We have a few options currently on our table as well that will really help us enhance the product portfolio, like I mentioned. In terms of Capex, I think what's significant is that we just commissioned India's the biggest furnace, right? 80,000 liters of super large vessels. And we also received our first order for 3 of them, right? Hopefully, we can use this to supply to the rest of the world and use India as a center of excellence for really the larger vessels, right? Besides that, I think most of the factories in Europe and the US have gone through a significant, improvement, renovation. So no significant the Capex there. But India, depending on how the market kind of grows, we might need to add some more Capex here to increase our capacity.
If you can give us a sense of the spend, though, is it going to stay how it has been, or do you anticipate that you mentioned you've had significant Capex, you've added that furnace. What is the outlook for, say, FY24 and FY25 going forward?
So no significant Capex plans for next year. We have obviously maintenance Capex, which is about 2% of revenues, but besides that, no significant Capex planned.
Okay. In terms of the split, and this I think will be my last question, between domestic and international, I think a lot of companies that have operations and focus internationally are perhaps treading a little cautiously, and they are turning more inward. What is your outlook and visibility for your company per se with regard to that split?
So currently we're split very evenly. 1/3 comes from the Americas, 1/3 from Europe, and 1/3 from Asia. So I think that also gives us some kind of the stability, because if one market doesn't do too well, there's 2 other markets that we can count on, right? So overall, I do see obviously global uncertainties, but the backlog that I have on hand, the order intake continues to remain strong. So in terms of visibility, the focus is really on execution, right? It's not anything that's like, it's not something that we are too much worried about. But having obviously uncertainty, if that kind of reduces, then obviously the outlook looks much more stronger.
My last question on margins: you've seen a substantial expansion both quarter on quarter and year on year, 15+%. Is that sustainable? Do we see further expansion? What's the ballpark that you're expecting margins at on a regular basis?
So we just had an investor day a few months ago, and we kind of gave outlook of 2025, 3,700 crores and 630 crores of EBITDA, which is about 17%. I would say that 14 to 15% is sustainable, but obviously to reach 17%, we need to start kind of showing improvement. I think India needs to play a much more of an important part in the total growth in terms of the margins. And I think India will start seeing that, both in terms of material prices going down, but also the product mix changing, right? So India is going to be the big focus in terms of improving margins as well. International business has already done quite well.
Tarak, pleasure speaking with you. Congratulations, and look forward to the next chat already.
Alex, thank you very much. Thank you.
All right.